Imagine losing most of your trades, yet becoming a $400 million legend. Sounds crazy, right? Meet Richard Dennis, the market rebel who cracked the win big, lose often code. This trading titan turned the tables on conventional wisdom, making his fortune by embracing loss. But how did Dennis defy the odds? Is it genius madness? We'll dissect Dennis's secret formula today and see if you can use it to win bigger by losing big. To understand Dennis's strategy, we first need to comprehend the concept of trend following. Picture yourself at the beach, watching the waves roll in. Some waves are small, others are gigantic. Trend following is like spotting and riding that once-in-a-lifetime monster wave. Sure, you might get wet on a few smaller waves, but you're there for the big one. Imagine another scenario. You're at a train station, a high-speed train is already in motion. You sprint, jump on board and let the train do the work. That's another way of looking at trend following. You're not trying to predict where the market will go. You're jumping on when it's already moving and riding it for all it's worth. Now, how can we spot these trends in the market? That's where key technical indicators come in. Think of these as your surfboard or your train ticket. They don't guarantee you'll catch the wave or the train, but they sure make it easier. First up, we have moving averages. This is a way to smooth out price data by creating a constantly updated average price. It's like a trail of breadcrumbs that can tell you which way the market is heading. If the price is above the moving average, the trend could be upwards. If it's below, the trend might be downwards. Next, we have the Relative Strength Index, or RSI. This is a momentum oscillator that measures the speed and change of price movements. It can help you identify when a market is overbought or oversold. Simply put, it can give you a heads up when a trend might be about to turn. So there you have it. Trend following isn't about winning every trade. It's about catching the big winners that more than make up for the small losses. It's about riding the rising tide, and when you do, the rewards can be enormous. Remember, these indicators are your navigation lights, guiding you to your entries and exits, but they're not guarantees. Now, onto the core principle of Dennis's strategy, the 1% rule. Imagine this rule as a safety net, a protective barrier between you and financial mishap. It's about limiting each trade to risking just 1% of your account. Think of it as a fire escape, offering a safe exit in case a trade turns sour. Let's put this into perspective with a visualized case study. Picture two traders. One is Dennis, faithfully following the 1% rule, and the other, a reckless trader, risking significantly more on each trade. Despite experiencing more losses than wins, Dennis's account steadily grows over time. The reckless trader, on the other hand, sees his account diminish rapidly with each loss. The difference? The 1% rule. This rule acts as a buffer, providing a shield against substantial losses and gradually building wealth, even in the face of frequent losses. It's a bit like the tortoise and the hare, where slow and steady ultimately wins the race. Now let's bring this closer to home. Consider your grocery budget. You wouldn't risk all your grocery money on a single item, would you? Instead, you'd spread your budget across various items, ensuring you have enough to cover all your needs. That's exactly what the 1% rule does. It's about responsible risk management, just like shopping within your budget. Two more keys to Dennis's success are discipline and adaptability. Discipline is paramount. It's about following your strategy like a dedicated athlete follows their training routine. It's about managing your emotions, not trading out of frustration or fear, but alongside discipline, adaptability plays a vital role. Dennis tailored his approach to match his unique risk tolerance and goals. So, while it's essential to learn from others, it's equally important to adapt those lessons to your circumstances. Like a disciplined athlete, stick to your plan, but remember, adaptability is just as crucial. Let's quickly recap what we've learned about Dennis's approach. He championed trend following, like a surfer riding the wave of the market. His safety net was the 1% rule, limiting the risk per trade. Discipline and adaptability were his guiding stars, helping him navigate the choppy waters of the financial sea. But remember, trading carries inherent risks. It's crucial to make responsible decisions, practicing due diligence. Trading is a powerful tool, not a guaranteed shortcut. Always do your research and start small. Ready to apply these principles to your own trading journey? Dive deeper with our free trading guide, packed with practical tips and insights on trend following, the 1% rule, and discipline. For further learning, explore the life of Richard Dennis and other financial wizards through the additional resources we've curated. And as you embark on this exciting venture, remember, As Dennis said, the biggest mistake is not taking any risk. In this game, you can only fail to fail.